Hi friends, welcome back to FinveStocks. Picking good sector and good investment story at right price is more important than picking good stock at wrong price, which can block your entire capital for so long. As you are aware, cash is king, so we need to preserve our cash. So here we are discussing good stocks at various level, so that if someone miss out some important level, can wait for next good level to enter. Today, we will continue with our top growth stock for year 2022. These are not only high growth stock, but also fundamentally rock solid stocks. The next on the list is proxy play to real estate. For the last 5 years, Indian real estate market didn't perform well, but it is showing signs of strong recovery, where the sector is bottoming out in terms of both volumes and prices. Low interest rates, government support, and consolidation in the industry are acting as a key catalyst for a turnaround in this sector. We need to focus on indirect beneficiaries of this boom in real estate sector. One such theme is our next investment pick. This company is a strong player in the fast growing wires and cable segment and enjoys strong brand positioning. It has an extensive distribution network and a strong product portfolio. It is one of the most backward integrated cables and wire manufacturers in the country. It's POLYCAB. POLYCAB is India's leading manufacturers of cables and wires and allied products such as UPVC conduits, lugs and glands. They have a range of cables and wires for practically every application. More recently, POLYCAB has also launched a wide range of consumer electrical products like fan, switches, switchgear, LED lights, luminaries, solar inverters, and pumps. POLYCAB has 25 manufacturing facilities at 7 locations. 4 of the 25 facilities manufacture FMEG products. POLYCAB is number one manufacturer of wires and cables in India with a market share of more than 18%. If you see product-wise revenue mix, 81% contribution is from wires and cables. In case of distribution channel, 58.5% is from B2B, whereas 38.1% is from B2C. If you see the revenue mix from location wise, India is contributing around 91.6%, whereas rest of the world contributes around 8.4%. In terms of operating profit, majority of the contribution is from wires and cables, that is around 86.6%. Now let's see some of the important financial parameters of the company. POLYCAB is having an overall market cap of around 37,000 crores. The stock is currently trading at a PE of 45.4, which is nearby the industry average, which is around 40.6. Considering the growth perspectives, the stock is available at a good valuation. The dividend yield of the company is around 0.4%, which is okay. ROCE and ROE is above 20%, which is very good. The price to book value is around 7.57 and debt to equity is around 0.05, which means the company is literally having no debts. The company doesn't have any pledged shares. The interest coverage ratio is around 24.7, which is very good. The company is holding cash equivalents of around 242 crores. The free cash flow of the company is around 1047 crores, which is very high. The company has generated a sales growth of 11.4% in last 5 years, whereas profit grew by 36.1%. If you see the financial trend of POLYCAB, the company has generated an overall revenue of around 6,830 crores in 2018, whereas in 2021, the company has generated an overall revenue of around 9,060 crores. The overall growth of revenue was around 7% CAGR. In case of profit, the company has generated around 360 crores in 2018, whereas in 2021, the overall profit was around 880 crores. The company's profit has grew by 25% CAGR for past 4 years, which is very good. If you see the shareholding pattern of the company, promoters hold more than 68%, which is an important parameter. The DAI hold approximately 8%, whereas FII hold 6.9%. Retailers hold approximately 16%. If you see return over last 1 year, it has generated a return of around 98.41%. Almost double the capital. So what is the best level to enter in this stock? Currently, the stock is trading in the range of 2477. It is having a good resistance at 2570 levels. It had tried almost 4-5 times to break that level. And it is having a good support at the range of 2221. So for a long-term investor, you can have a good buy at the range of 2200 to 2300 levels. Or if it breaks 2570, you can plan to buy a small quantity at 2600 range. Also, the company is showing significant volume growth in past 5 months. And the RSI is also getting stronger. So definitely it's a good buy at current level. Globally, the specialty chemical business accounts approximately 20% of overall chemical industry. Out of that, India's presence is approximately 4.5%. India's share in specialty chemicals is expected to double over next 5 years at a rate of 12% CAGR by 2025. The domestic specialty chemical industry, which clocked double the global average of 11.7% over last 5 years, is valued at 32 billion USD. India's ranking in specialty chemical is not there. It is the 6th largest producer of chemical globally. The India specialty chemical industry is expected to deliver at a CAGR of 12.4% over next 5 years, reaching 64 billion USD by 2025. This growth would be led by a strong demand in export and end-user industries. The next growth stock on the list is a chemical manufacturing company based out of Gujarat. It is a leading manufacturer of organic, inorganic, fine and specialty chemical. It's DEEPAK Nitrate. DEEPAK Nitrate Limited is a chemical manufacturing company. The company's segment include bulk chemicals and commodities BCC, fine and specialty chemicals FSC, and fluorescent widening agent FWA. It also manufactures a wide range of intermediates for use in industrial explosives, paints, cosmetics, polymers, optical brighteners, and others. The company also manufactures phenol, acetone, and isopropyl alcohol (IPA) through its wholly owned subsidiary DEEPAK Phenolics (DPL). DEEPAK Nitrate has a 70% market share in sodium nitrite, sodium nitrate, and nitrotoluenes in India. The company has been successful in substituting the majority of the local market imports of phenol and acetone and attained a market share of about 65% in our country. DEEPAK Nitrate has solid expansion plans. It acquires land as a part of capacity expansion in Gujarat, Hyderabad, Maharashtra for approximately 141 crores. The company will be investing around 300 crores into new products based on environmentally friendly technologies for agri-chemical and pharmaceutical intermediate. Also planning to invest 100 crores for expansion of existing products. Now let's see the revenue mix of DEEPAK Nitrate. If you see segment-wise breakup, phenolics contributing 66.6% of the overall revenue mix. Then comes basic chemicals, which is contributing around 15.6%. Fine and specialty chemicals contributing 11.5% and performance products contributing around 6.2%. If you see product-wise breakup, sodium nitrate is contributing 13%, whereas optical brightening agent is contributing around 16%. Ethyl hexyl nitrate is contributing 10%, whereas disulfonic acid contributing 19%. If you see the location-wise breakup of revenue, India is contributing around 70.8% of the overall revenue mix. Then comes Europe with 13.4% and Asia is contributing 10.8%. USA is contributing 4.4%. If you see the operating profit breakup, 62.4% of the overall operating profit is from phenolics. Then comes the basic chemicals which contribute 17.7%. Fine and specialty chemicals contribute around 17.1%. Now let's see the financial performance of DEEPAK Nitrate. DEEPAK Nitrate is having an overall market cap of around 34,554 crores. The current price of DEEPAK Nitrate is around 2,500 range. Currently, stock is trading at a PE of 32.5, which is reasonable compared to the industry standard, which is around 28.2. It is having good ROCE and ROE. ROCE is around 39.9, whereas ROE is around 39.6%. It is having low dividend yield. Debt to equity is around 0.14, which is very low. It doesn't have any pledged shares. Interest coverage ratio is around 29.5, which is very good. It is having a cash equivalence of 55.4 crores, whereas free cash flow is in the range of 790 crores, which is very good. It has shown a decent growth of 26% on revenue for last 5 years. It is showing a very high profit growth of 64.8% for last 5 years. Now let's see the financial trend and shareholding pattern of DEEPAK Nitrate. DEEPAK Nitrate has generated a revenue of around 1660 crores in 2018. Whereas in 2021, it has generated an overall revenue of around 4380, which is around 27% CAGR growth. In terms of profit, company has generated a profit of around 80 crores in 2018, whereas in 2021, it has generated a massive 780 crores profit, which is approximately 76% CAGR growth. If you see the shareholding pattern of DEEPAK Nitrate, 45.7% is with promoters. FII hold 10.8%, whereas mutual fund holds 7.6%. Others, including retailers, hold 32.9%. If you see the overall return in last 1 year, it has given a mammoth return of around 140%, which is very good. So what is the best level to enter in DEEPAK Nitrate? Currently, it is trading in the range of 2500. It is having a stiff resistance at 2544. Currently, the RSI is trading above 60, which shows good momentum for the stock. Once it breaks 2544, one can start accumulating for higher levels. If it breaks 2544 level, then it can go to all-time high. If it is failing to break the resistance, it can come back to 2400 range. So one can start accumulating at 2400 range for long term. Even if it breaks that level, the next support level is around 2200 range. So for long-term investors, one can safely assume to start accumulating around 2200 level. For short-term traders, they can wait for the breakout at 2544 level. Once it breaks, they can comfortably make position for short-term, which will give an immediate 5% return. DEEPAK Nitrate is one of the best stock in specialty chemical sector. One can safely bet on DEEPAK Nitrate for long-term. The next investment idea is a market leader of glass-lined equipments in India, with enjoying more than 50% market share. The company is GMMpfauddler. Earlier, GMM was a joint venture between Pfaudler and Ashok Patel family. Pfaudler is a 130-year-old German company. Recently, GMM has acquired the global business of Pfaudler, along with Mavag. GMM would owns 54% of Pfaudler Global. GMMpfauddler manufactures corrosion-resistant glass-lined equipments. It is a leading supplier of process equipments to the pharmaceutical and chemical industries, having diversified its portfolio to include mixing systems, filtration and drying equipment, engineered systems, and heavy engineering equipments. If you see the revenue mix of GMMpfauddler in various verticals, pharmaceutical sector contributes around 34%, whereas chemical sector contributes around 48%. Others contribute 18%. If you see product-wise breakup, glass-lined equipments contribute around 62.6% of overall revenue mix. 22.4% holds by proprietary products, whereas 15% hold by heavy engineering. If you see the location-wise breakup, India is contributing around 61.6%, whereas rest of the world contributes around 38.4%. If you see the overall financial parameter of GMMpfauddler, GMMpfauddler is having a current market cap of around 7,458 crores. Currently, the stock is trading in the range of 5,000 levels. It is trading at a PE of around 116, which is much higher compared to the industry standard. Industry PE is around 25.3. It is not a high dividend yield company. It is having a decent ROC and ROE growth. ROC is around 15.9%, whereas ROE is in the range of 20%. It is having a face value of 2. It is having a significant debt. Its debt equity ratio is around 1.48. The debt level in the company is slightly high compared to industry standards. Promoters doesn't have any pledged shares. If you see the interest coverage ratio, it is around 4.65, which shows the capacity of the company to pay the interest, which is okay. It is having a cash equivalence of around 279 crores. It is having a free cash flow of 79 crores. If you see the sales growth for last 5 years, it has generated a growth of around 27.9%, whereas profit growth for last 5 years is in the range of 30%. Now let's see the financial trend and shareholding pattern. If you see the financial trend, the company has generated a revenue of around 167 crores in 2018, whereas in 2021 it has generated an overall revenue of around 558 crores, which is good. If you see the overall profit in 2018, it was around 27 crores, whereas in 2021 the overall profit is around 134 crores. If you see the revenue growth for last 4 years, it has generated a CAGR of around 35%, whereas in terms of profit, it has generated 48% CAGR, which is very good. If you see the overall shareholding pattern, 59.9% is with promoters, 20.6% of the overall share is held by FIIs, whereas 13% of the share is held by others, including retailers. Mutual fund holds 6.4% of the overall shares. If you see the return in last 1 year, GMMpfauddler has generated an overall return of around 32%, which is very good. So what are the good levels to buy for GMMpfauddler? Currently, it is trading in the range of 5,000. It is having a stiff resistance at the range of 5,200. It is showing good strength on RSI. RSI is showing more than 65, which shows the stock is in good momentum. With this momentum, if the stock can break 5,200 level, then it can move directly to 5,500 level. If it fails to break, then it has come back to 4,900 level, which is the immediate support. Once it breaks that support, it can go to 4,800 levels. So for long-term investors, one can safely start accumulating at 4,800 levels. So one can safely invest in GMMpfauddler for long-term investment. So till now, we have covered 7 stocks out of 10 stocks, which have good scope of revenue generation as well as profit growth generation. So study these stocks for good potential growth. In our next video, we will go through the remaining 3 stocks along with our 1 bonus stock. Also, I have a small surprise for you, which will reveal in our next video. If you wish to join our WhatsApp group for information sharing related to stock market, you can WhatsApp me in this number. This group is only for information sharing and not for tips. All these buying levels discussed here are just for educational purpose. Consult your financial advisors before purchasing any stock. So stay tuned to get all these 11 stocks which will create wealth in future. Also, I am planning to make a series of swing positional stock ideas with fundamentally good companies, which will be released on a regular basis. So stay tuned so that you will not miss that. If you are not a part of FinveStocks family, don't forget to subscribe so as to get a regular update. If you like the content and analysis of this video, please do share and like this video. Also don't forget to subscribe the channel. Please don't forget to post your messages on comments. Which stock you are planning to buy at current levels. Also do comment which stock you wish to see the detailed analysis. I'll definitely do it for you. Thanks for watching and have a good day.